Mike Santolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning on August 29th. Just as a reminder, our offices will be closed on Monday, so any publications or anything will be coming out on Tuesday. I hope you have a great long weekend. For the market, I think the overall picture or the trends that we've been seeing are still playing out, which is sort of a rotation of the broad market and either out of growth stocks, or at least growth stocks aren't really participating for the most part. Big picture, as we kind of leave summer behind, just taking a step back, I remain very bullish. There's a webinar this week, very bullish on the long term or the next, 12 months or something like that. The setup we've seen earlier this year is kind of a classic reset correction in a market that kind of wipes out and kind of breathes new life into the bull market. It's not 2009, it's not a generational low. And it's not a low of, it's not like 2022 where you had a year-long, grind lower, obviously. But it's probably like 2020 or 1998, if you remember that. These things tend to lead to 12 to 24 months of good performance, and we're about 4.5 months into that. So I still think, there's nicely higher prices for the general market down the road. And I think the broad market rotation over time is a good thing in that sense, just kind of having more stocks participate on the upside. However, in the last, 2 months really for growth stocks, but even really for most of August, under the hood, it's really been more money sloshing back and forth. It's not like, wow, we really have Fidelity and all these just buying with abandon. It's become selective, news driven. What's the Fed saying? Earnings reports. Today there was some report that, Alibaba has some chip and that's hitting chip stocks. Just stuff like that is going on. It's not really a persistent trend per se. Okay. Now I will say, coming into today is not a great day for growth stocks. I do think there's a decent amount of setups. A lot of stocks have been basically sitting around for a couple months. And if we go into September or late September, early October, whatever, and they break out on the upside, I think there could be a lot of fresh high odds entry points, especially on the growth side of things. But as always, I need to see it to believe it. Right now, we're holding a lot of cash in Cabot Growth Investors model portfolio. We did a little buying this week, but we're still about half in cash, which is probably too much. But I just feel like the more money we put in, the more it's kind of like a meat grinder. You put it in and maybe one works, but then one doesn't, and you get knocked out, and then they kind of bounce around. So we're kind of playing things lightly, whatever that means to you, staying close to shore for when there's kind of a higher odds entry points ahead. Okay. Overall, then bullish, optimistic. I think things, especially growth stocks, will re-engage. But timing is important, and you don't want to jump the gun, especially if we have a a 2 or 3 week correction or something like that unfolds. You don't want to jump the gun in some of these volatile names. Okay, that's enough of a preamble. Let's hop into the charts. As always, I'm using a program called Market Surge, product of Investors Business Daily. You can learn more at marketsurge.com. As always, starting with the major indexes. Say today, as I record this, which is around 11:30 in the morning, Nasdaq's kind of getting hit. Growth stocks, AI stuff, which was strong yesterday, kind of coming right back down. That's kind of the pattern we've been seeing, is just looks good, boom, gets hit, and then you kind of like net basis, not a lot of progress. Now that said, the major indexes, when looking from a top-down perspective, still in an uptrend, still above the 50-day moving averages. So the intermediate term trend clearly up. You can see the S&P 500 actually tagged a new high yesterday. I would just say, again, this is very, very tertiary, if that, but the S&P and the Dow have been hitting, just hit a new high here recently. The Nasdaq did not. So it's like a small, in my mind's eye, like a small near-term negative, but we'll see how it plays out. Clearly in an uptrend here. And of course, the rotation we've been talked about has helped. This is small caps, nice little breakout of sorts there. And this was the follow through last Friday on the Fed day, and it's been consolidating in here, mid caps, same sort of action. Not quite as strong, but positive above the 50-day line, New York Composite. So the good news is we're all the indexes are above their 50-day line. That's trending higher. I wouldn't say there's a ton of daylight. If we came in and we had a 2% or 3%, some big down day, it would be like, whoops, now we're on the fence. But you can say that a decent amount of time, okay? You can also just see, not to beat a dead horse here, but this is relative to the S&P 500. So like, for instance, this is the New York Composite. You're clearly seeing some outperformance from New York Composite's kind of a broader index, a lot of financials, materials, stuff like that. You can see some outperformance sort of from the broad market, okay? Meanwhile, like growth stocks, I think the index I think that shows what's been going on, at least in my experience here, is this is the equal weight NASDAQ 100, which we've looked at repeatedly. But you can just see since the beginning of July, it really hasn't done anything. We had a big, sell-off a few weeks ago, and since then it's just been, yes, there's been, excuse me, some stocks that have gapped on earnings, look pretty good, but then those earnings gaps will fade, and that sort of thing. So we're just seeing some of this action now. We come in, like I said, next week or 2 weeks from now or whenever, and all of a sudden, boom. I'm not saying in this index in particular, but for growth stocks, all of a sudden you're like, wow, it looks like a nice kind of rest period and all that. The risk is that we've just had this, big run and recovery and run, and maybe we need to back and fill some, which wouldn't, I don't think, be the end of the world. But again, when you're dealing with individual stocks that are pretty volatile, timing is important, okay? But same sort of thing, if you look at, IBD 50, I don't think it's a perfect measure. I think growth stocks have been a little stronger than what this is showing, but it has been chopping sideways for a while. And even like the Momentum Fund, which is not a perfect measure of growth, this is MTUM, but it's kind of high relative performance stocks. You're going to see that it really just hasn't been a lot of, it's up 1.5% since the start of July. Just not a lot of progress, a lot of ups and downs, but not a lot of movement. So we'll see how it goes here. To me, I'm still seeing as many stocks kind of trip stops and 50-day lines as I am, if probably more of those than I am seeing like emerge at this point. So which is why I'm playing things a little bit carefully here. Okay, just running through some other indexes here. I will say I enjoyed seeing, not to have short and fraud, but like, XLP kind of came right back in this week, which is good that, maybe it's going into the broad market, but to me, that's a good sign that it's not like their institutions are reaching for safety. They're reaching for, maybe cyclicals or something like that, or home builders or something, but they're not reaching for defensive stocks thinking there's some huge drop underway. So far, so good on that. But just, we are seeing this. There's no question. Like, this is the regional banks, which is it's kind of one of my go-to, like, broad market sector, so to speak. Like, how's the broad market doing? And this was the Fed last Friday. It's trickled higher since then. Again, we'll see. It could come right back in, but so far you're seeing some stuff like that. You're seeing oil stocks. Again, this isn't like the be-all, end-all, the greatest chart in the world, but this is oil drillers or oil explorers, I should say, XOP. You're going to see kind of nice follow through this week, even though oil prices really aren't doing much. This is OIH, oil services, kind of a little toying with a breakout here, that sort of thing. So there is definitely strength coming into the broad market, but to this point it's been sometimes rotating, then re-rotating. And like I said, that's, I guess the best way I'd put it is it just seems like money's kind of sloshing back and forth, as opposed to, hey, here's these 7 themes that are going on, and that's where the money's flowing, and that's what you can take advantage of. At least at this point, it's just much choppier and trickier than that, okay? Now, in terms of, I'm going to split this into kind of growth-oriented names and then some of the broad market names. We did see some earnings reports this week that, caught my eye. So this is Pure Storage, PSTG, big long consolidation. The numbers are kind of weird here. They're actually accelerating a little bit now, but there was like a switch to a subscription business, but it's not fully there. And anyway, so there's other storage plays like that we'll actually take a look at, but this is more flash storage, and you can see some nice tightness here. And then it kind of went ballistic yesterday on giant volume. Now, we have seen a lot of these earnings moves kind of, I don't want to say outright fail, but something will, do this sort of thing, and then it gaps up, and then it kind of does one of these and maybe ends up here. So it's higher than where it was, but it doesn't pay to buy the gap is what I'm trying to see. So we'll see. Maybe this is something that just fades from here, but I am kind of flagging it just as the volume, and obviously the price move was pretty outstanding. AppLovin, this is kind of interesting. I don't want to spend too much time on it. This was, a big winner for us last year, probably the market's number one, glamour stock. I don't remember selling something, having it collapse, and being interested in it within the next couple of years. I mean, we've had a lot of big winners over the years, thankfully. But I have to say, I am intrigued. There seems to be something new here. You did have this breakout. It did get kind of hit. This was during that growth stock wipeout last week or a couple weeks ago. But the rebound has been very good. It's kind of a little bit of a higher high. Yes, there's this old overhead. And yes, it's already had a huge run the last couple of years. That's kind of my biggest thing, is it's had such a big run. But it seems to be getting its act together. So it's certainly not low risk, either in near term or long term. Near term, it's very volatile. But I am kind of intrigued by it. Maybe the 500 level ends up being the top or whatever. But this latest snapback here, combined with the breakout, combined with the newness of their story, which I'm not going to get into here in the numbers, it still has the characteristics of a winner if it wants to go. So it's something I'm keeping my eye on. We talked about Pure Storage. This is just the hard disk drive players, which we've mentioned. Seagate, nice move this week. Again, down this week. So we'll see how it goes. Some of these you wonder, at some point these things are going to, correct and consolidate. So you wonder how this will play out. But there's no question right now, STX especially, and then WDC, both look good and proper and continue to remain in pretty strong uptrends. And today's action, while down, it's not like it's breaking any support or whatever. Snowflake, this is a name we owned. It looked great, new highs, or at least new multi-month highs. We talked about it on this video quite a bit. We owned it in the letter. But again, this is just one of those names like we talked about software, retail, medical, like crypto, like payment, like so many areas just really haven't got going. Out of nowhere, it's hitting a new high. The next day, it's breaking the 50-day line. But here we go, back now, reacting well to earnings. We'll see how it goes. Net, if you just kind of made this a line chart, it's basically been doing sort of this, and then it's back up to here. So we'll see how it goes. It's still choppy, but I'm just kind of flagging it, like if it can kind of rest up here, consolidate, follow through, it could be interesting again. The numbers are good, and they are accelerating, which is something that no matter what I did with it before, I'm not afraid to get back in if I think it's going to have a run. So just flagging it here. Retail, so this is so here we go. Like this is just perfect what we're seeing. This is Amer Sports, gaps up on earnings. Very flat in here for literally 13 weeks, I think it was, or 12 weeks. Has a pretty much a shakeout right here on earnings. Right here on earnings. And then snaps right back, and you're like, wow, that looks pretty good. And now it's kind of come right back down in. So it's not broken. There's some support in here. Obviously there's a lot of support in this area right here. But AS, it's on my watch list, but you're kind of like, can we decisively get going? Dutch Brothers is another one where, to me, sort of, this area's, I'm not saying you buy it above that area, but that's clearly an area that's relatively critical. But I am intrigued. It did have a nice little volume cluster here. Rallied to new, higher highs from the earnings gap a couple of weeks ago. Of course, now it's selling off again. So, this is the type of thing we're seeing as it goes up for a few days, down for a few days. We'll see if it can follow through, on the upside going forward. Reddit, I like the story a lot. I like the numbers a lot. I wouldn't say near term, like when we looked at app, this is very, very near term. And I'm not saying there's probably bigger factors at work like the environment for growth stocks. But this was app. See how this kind of recovered from the growth stock shakeout and actually hit like a higher high. Whereas you have Reddit, gets hit, and so far it's just kind of sitting there overall. That's very near term. That doesn't mean a week from now it could look different. So I'm just saying right now I would like to see a stronger bounce. But overall, I do like this general picture. It actually squeaked out to a new high here. Maybe it just needs a little time to rest before getting going. Maybe the moving averages catch up. But anyway, Reddit's on my watch list as well. CRDO, I don't know what you do with this CRDO. A, it's volatile. B, it's getting hit today, but you can see it again, tremendous relative strength. Gets hit on the growth stock sell-off right here. Comes all the way back to a new high. Yes, it's getting hit today. So we'll see. Maybe this is, sometimes you get these, they call it 2 down, 2 up or whatever. Sharp down, sharp back up to new high. Sometimes after a big run, sometimes that's a little bit of an exhaustion thing, but I don't know. I'd rather go with a relative strength, okay? And like MP Materials here, this one does intrigue me. I do like it. You can just see the stock obviously changed character. This is when the stock had the deal with the government and just went ballistic on the upside. And so far it's been calm. Now, that doesn't mean it can't come in next week and they hit the stock sharply or whatever, but holding the 25-day line despite what's going on. Not that this is a growth stock, but high relative strength stocks have been kind of hit here and there. But still holding the 25-day line, consolidating quite normally here. Obviously, it could take a bigger rest if it wants to, but so far, so good on that. In terms of broad market names, obviously sort of building and construction-related stuff. So this is Zillow. It is a little bit, you can see the pattern here lately. It's a little volatile here, but holding the 25-day line. And when you back out, it's just kind of, it's another one of these names just kind of sitting there near its old highs. You'd like to see a decisive breakout or whatever, but anyway, this is clearly a name that's probably going to benefit if there really is a housing recovery. D.R. Horton has been up all but, well, I guess it might be down this week, barely. It's barely moved at all, but it's been up, you can see, almost every week here in the last 2 or 3 months. Still shy of its old high, but clearly had a big correction. Looks like it's changed character, acting well. Internet. There's all sorts of, this is installed building products, IBP, which is just kind of a smaller, not small, but $7 billion market cap. But you can see clearly, big change in character here, huge volume clue pops on earnings. A little resistance up here, so it's kind of, it's fooling around right here. I'm sure the Fed meeting in September will affect it, but IBP looks pretty good. Construction Partners, a little bit of a roll-up story. Actually, I think it's a lot of a roll-up story, but it's been choppy. It had this big consolidation here, and then it kind of came back, and again, like so many stocks, it kind of had this 8-week kind of consolidation shakeout, and now it seems to be, it breaks out, it comes back. It's very choppy, but you can see it's making progress. And after this consolidation and this bigger consolidation, I think it looks prime for higher prices. Wynn Resorts looks like the leader in the casino group. Some of these have been strengthening. You can see it's just been dead money for a long time, but it started to change character recently with this ramp, and then it basically went tight sideways, had a nice shakeout on earnings, held support, and now it's really lifted higher here. Pullbacks are always better. Last but not least, just Celsius. This is kind of a growth name now, but it went through the ringer. You can see on the weekly chart. Big run overall. It was kind of hard to handle here for the last 18 months of its run, and then it got destroyed as Pepsi sort of pulled in a little bit. But the big volume clue marked the bottom, and it's basically been trending higher since, but it's been, which has been nice, but it's been fine. It's been trending the 50-day line, but you can see after this earnings move, it seems to have changed character. Nice volume clue, not just a one-day move. And as opposed to these that have kind of gapped up and given it back, this is gapped up and accelerated higher. A little pullback here is meeting with buying. So there are a lot of other names that are, I wouldn't say there's 200 names out there in the quote-unquote broad market that are all soaring and you got to get in. A lot of them have questionable fundamentals. A lot of them are a little thinner, things like that. But there are things to be able to latch on to. The question going as we kind of roll into September is, how do things go with the market? Does the market, which has not had anything more than these 2 and 3 day shakeouts so far, does it need a 5% correction? Does it not? I'm not going to get into the prediction game right now. I would say the trends are up. Things look good, and if you see a good setup, if you see a good breakout, you see a pullback into support, I say take a swing at it. At the same time, for your overall portfolio, I do think staying somewhat close to shore, at least in sight of shore, makes some sense, just given the extended run, number one, and especially for growth stocks, there's just not a lot that's consistently working. Yes, there's some names that haven't broken down that are, have been going up, like a Robinhood, is testing the 50-day line. But even Robinhood really hasn't made any net progress here since the beginning of July. It still looks okay. I'm not saying, but, there's some of these names that haven't broken down, but, there's not a lot of things that you're like, wow, I got to get in, right here because it's just starting a new run, okay? So overall, positive, optimistic. But right now, let's just see how the market handles itself when the big boys come back from the beach next week. Okay, that's all the time I have. Thanks for listening, and be sure to come by again next week for another Cabot Weekly Review.